Welcome to PhillipCapital's Weekly Market Watch. I'm Yi Ling and I'm an investment analyst with Phillip Futures. Today our topic for discussion is copper. Since copper prices peaked at $10,000 a tonne in February 2011, prices have slumped amidst fears of a hard landing in China, sovereign debt woes in Europe, and slower growth in the US. Copper, a risk asset sensitive to global growth prospects, is now trading at about 20% lower than the start of 2011. For now, the outlook for copper prices is largely a function of developments in Europe and the ongoing debt saga. Despite a historical agreement to draft a new treaty for economic integration, investors remain unconvinced. Eurozone bailout facilities still do not have sufficient munitions to guard against contagion. The European Central Bank has also refrained from more aggressive intervention in bond markets. As Europe sinks into recession, macroeconomic pessimism has weighed on all risk assets. Copper is likely to be under pressure in the near term. On a more optimistic note, Chinese consumption of copper will expand as the nation develops infrastructure and builds more apartments. China is the biggest consumer of copper, and the economy is expected to grow a decent 8.5% in 2012. Should growth slips below 8%, we expect the government to ease policy further. A meaningful ease in policy might cause copper demand to jump. The recent decline in copper prices has also prompted many Chinese buyers to return and capitalize on the favorable arbitrage between Shanghai and London trades. Accumulation of copper stockpiles by Chinese buyers on price dips could help cushion the downside in copper prices. Lastly, on the supply side, copper production remains constrained by declining ore grades, environmental concerns, and strikes. The supply for copper is unlikely to match demand, and the market could be in a deficit for 2012. Hence, taking a longer-term view, copper prices may head back above $9,000 a tonne in the second half of 2012. Thank you for watching, and tune in again for next week's Weekly Market Watch.